been up until the last couple of months really been focusing our analysis on the Nasdaq, but with growth by and large out of favor, there are of course some pockets of strength. We've really been shifting our attention more to what the S&P 500 is doing. So what do you think about what we're seeing in this market that is still split, even though the Nasdaq has improved a little bit?
Yeah, no, that's a good point. I think since early February, we've essentially been in two totally different markets. Usually all the major averages move together, but we've been in a correction in growth as seen by the NASDAQ composite. But all the other sectors, such as financials and energy and retail and steel and other materials and transports, because there's 11 sectors in the S&P 500. The other sectors have been in a strong bull market as seen in the S&P 500. So I think it's frustrating. Some people mostly trade growth stocks, but it almost makes sense because the market's a discounting mechanism, meaning last year, all the sectors that were benefiting from work from home were doing very well. Meanwhile, energy and some other sectors were really getting hurt last year. And because the market discounts and trades on what's going to happen 6 to 9 months from now, all the tech started correcting because the year over year comparisons become tougher. But then the energy and financials and everything else, because of that sector rotation, has kept the S&P 500 propped up.
Most definitely. And Dave, it was good to see support at the 21-day line for the S&P yesterday.
That's a great point, Allie, and I completely agree with what Joe was saying. On a shorter term basis, that sort of divergence between the Nasdaq and the other indexes has stuck out all through this time. I do want to add, though, it's interesting that just looking at the rebound off the early May lows, the Nasdaq has had the biggest bounce, up about 8%. To its recent levels from the low on May 2nd or just the first week of May. The S&P 500 had about a 2% or 4% gain, and then the Russell 2000 up about 6%. So, it's interesting in the past month, Allie, we've seen the NASDAQ try to catch up a little bit, finishing below the 50-day moving average just by a little bit yesterday. We had a technical distribution day, but the distribution count, as noted in the big picture, reflects that there's moderate level of institutional selling within the NASDAQ name. So it'll be very interesting how we finish for the week and heading into the weekend, where the money could be starting to flow once again come Monday.
Most definitely. And Ed, we like to say that pullbacks to moving averages can be buying opportunities. So do you think that actually the recent action that we've seen this week, if today ends up being a good day, we could see more buying opportunities with this action?
I mean, it could. And one of the issues is that it's always one of the problems with pullbacks in general is that it's always after the fact. They often seem obvious, and then sometimes. So we'll see. Do we, if we rebound here, if we say take out Tuesday's high, on the NASDAQ, or the Qs, that would sort of be an area you could argue, okay, we're moving, and you could imagine a lot of things looking pretty strong at that point, maybe, but we could also turn around. So it's a really pivotal day to be looking at, to be paying attention to the market, because you just don't know, are we going to see the NASDAQ rebound? We're back above the 50-day line, which is really great. Are we going to really strengthen, have a sort of a broad market rally, or are we going to have that split rally continue that we've had off and on since February, as Joe was saying?
That's exactly right. So Joe, let's take a look at some of these chip equipment makers that you are watching, kicking things off with Applied Materials here. Ticker AMAT getting back above its 50-day line in recent weeks, and since it's been trading in a tighter pattern here. What do you think about it in terms of still being viable at these levels?
Yeah. Before I forget, last time I was on, and thank you again for having me back, we had a follow-through day. So I just want people to keep their expectations very realistic today.
What? You're not going to spark another follow-through day in the market by being on IBD Live?
If I do, you're going to have me on every day for follow-through days.
Absolutely.
What I'm looking at, I like to look at relative strength. So when you pull up the SMH, which is the main semiconductor ETF. If you look at it, it's essentially the same level it was at in late January. If you draw a line across, it was from late January, early February. It's at that roughly 250 level. Now, when you pull up relative strength, go back to AMAT, for example, and look where it is now, and you draw that line from the end of January, where that 124.50 at the end of early February, draw that line across, that's where the SMH is. And you can see most of these semiconductor equipment names are well above that range. I still think they need to form bases, but this chip equipment, this shortage is not going to end anytime soon. And I think the chip equipment names will benefit tremendously. And as I mentioned, AMAT, LRCX, and ASML are three of the larger cap ones that are benefiting from this. And you can also see when you draw that line from 600 back in early February, this is another one that's well above where the SMH is. So within chips, these semiconductor equipment names are showing tremendous relative strength. Same with ASML.
So you're still looking for the bases to flesh out here. So what kind of buy points are you looking at? Breakouts to new highs?
Yeah, I'm looking for them to continue forming the right side of their bases. I think they're going to take another few weeks to do that. And then maybe they can start to run up in anticipation of the next quarter earnings. So when you look at them symmetrically, they just don't look like they're ready to go. But I do own some of these, full disclosure, but I'm just waiting for them to continue to form the right side of the bases, maybe let the 50-day, 21-day catch up to them so they can symmetrically form bases.
In order to add to your position. So when did you get in? How long ago? And how long have you been holding some of these?
I've been in some of these since the breakout in late March on a couple of them. And when they started to move out of that range, late March, early April, they came back down to retest. And then I started one in ASML recently as well, maybe last week on ASML. So I've been in over the last few months, I've been in these names. Again, just trying to gravitate towards some of the stronger sectors within growth.
Exactly, because that is a little bit more rare to see this year. Because again, when you take a step back, growth as a whole hasn't been where a lot of those standout performers have been this year. But it seems like, at least for now, this is a pocket of strength.
Yeah, I mean, software, everyone loved software, and there were a lot of names that went up 100 to 500% last year. It made sense as everyone was not only working from home, but companies really had to beef up the cloud security, everything cloud related. But when you study history, after stocks and after markets make big moves, they need to digest those gains. And it just comes from understanding and studying historical charts. You don't even need to be in the markets that long. Just go back and look at a lot of charts in general. And one of three things will happen. Some of these names, unfortunately, will never come back. Some will take a long time to base out and eventually come back. And I'm going to focus on the ones that snap back the best and will resume their uptrends when we eventually come out of these consolidation. But in the meantime, while software is correcting, there are other the other sectors that are doing much better right now.
Mm-hmm. And Dave, GM is doing well. A big pop yesterday. Ford's been looking hot. We've been seeing a shift into these more, traditional automakers out of electric vehicle plays. Tesla, of course, a shining star last year, not doing well right now, but GM
Exactly.
has been looking good.
It has. This little pullback right now looks pretty normal. You would like to see that shoot right past that 63.54 buy point. Nice symmetrical cup here, Ali. I think this is one to be watching. And, we don't have this one on leaderboard as far as I can tell, but, we are definitely invested in that sort of automaker space in the sense that we have chip companies that are also putting more of their chips into cars. Look at Ford, what an incredible move yesterday. It looked like it took a bite out of GameStop and AMC yesterday, right, for a big industrial play here. But if we could, and then look at that relative strength line, just perfect picture there, Allie, that blue line showing really outperforming the S&P 500. But yeah, I'd like to go to the weekly, and then let's look at the monthly chart, because I want to highlight the fact that, you know, some of us on the show might be concerned about the third stage base for GM right now in its current base. No handle yet, you know, maybe a handle could form. But what I find interesting is that just only a few months ago, the stock took all-time new highs past 45, 46, and the gain since then has roughly been about 35, less than 40%. So, you know, certainly from the lows back in 2020, it's had a ginormous move, right, for a stock like GM. But, you know, after hitting new highs, we're still seeing positive action here. So I personally would not be too concerned about the third stage base count. Technically, I do have some shares in an account, a couple of accounts, and looking to find a reason to add more, Allie.
You have shares. Where did you start buying out of this cup here back towards the beginning of the year, or where did you find an entry point?
You know, you're making me look too good. I wish I could say that was the time, but you know, it was really using the trend lines that we've been drawing on a lot of stocks on this show, Allie. So, you know, I took the 63.44 buy point, and then or the top of the left cup. No, that's definitely one good place, and I did buy on that gap up just right after. That's a very nicely drawn trend line indeed. And so I felt, okay, well, 60 looks like, you know, a key technical level. Add a few shares there, see what happens. It didn't fill in the gap between that big gap up day and the prior day. And then yesterday, once we had another strong move, I felt you could draw a second trend line. In fact, you know, from the same 63.44 peak across